Detroit Business Hub Group Director Nancy O'Neill works with her team of experts. Listen to conversations with business professionals to discover the latest business innovations, insights, and trends. Find out what's hot and what's not in today's business market.
Hi, I'm Nancy O'Neill. I'm here with our guest, Ray Blackwell. Ray Blackwell is a farmers insurance agent. He's no stranger to DBHG. He's also a treasurer for DBHG. Our scheduled speaker, Heather Carmona, has something come up, so she will be with us next Thursday. So we're going to go ahead and let Greg introduce himself, and we'll get started with the interview.
Well, hello. Thank you, Nancy, for that warm introduction. My name is Gregory Blackwell. I'm a farmers insurance agent / professional / whatever else we're going to add to my name and title. I've been a farmers agent for 11, actually going on 12 years now, right here in Southfield.
Great. And you're actually one of the only farmers agents still in Southfield. So you're the lone wolf. So tell us how you weathered the storm and survived so long.
Just one day at a time. Sometimes even when it gets a little rough, it's not as bad as you may think it is. You just wake up and just keep swinging. The very next day, client focused, staying lean, really relying on relationship building has been my stronghold. Sales has been kind of my stronghold as far as managing a business and managing people and things of that nature. That's not been my stronghold, but what's gotten me through is just really salesmanship, people relationships, and that's kind of been my stronghold, and that's kind of what has gotten me through. And here we are, 11, 12 years later, still clicking along.
Okay.
Mm-hmm.
Well, one of the nice things about owning your own business is when you own insurance business, and insurance business is residual income. So how has that residual income helped you in your business to grow and build your business and even sustain through that time?
Yeah, so I've been doing this for about 11 years now. I really haven't taken much time off or really much seen the benefits of the residual business. I certainly had known it was there, but I was always there. I mean, every day pushing and moving forward and not necessarily looking at it until I will probably say about maybe a year and a half ago, 2 years ago, when I kind of had some transitions that happened in my personal life, where I literally, I'll probably say for perhaps 8 months, really didn't focus on business at all. And yet, gross revenue stayed right on pace. I mean, the residuals just carried me. I mean, it literally carried me to the point where once I got my head back into the game, I had a whole new appreciation for residual income. And I've been building this thing up at that point, I was probably building up for about 10 years, like 9-10 years in, but it makes a difference. And then fast forward to the pandemic and, the work shutdowns, and I shut down my office and wasn't able to conduct business as usual. So perhaps new business suffered a little bit, but residual business just clicked right along throughout the pandemic, throughout the shutdowns, throughout all the things that were going on in the in the environment. Yeah, and that's one of the fortunate things about this particular business, that it does have some residual components. It's not residual such that you can just sit back and drink margaritas and you still have to service folks who are patronizing you, and and so it still requires that you be present and you take care of folks and take care of needs and issues when they come up. But residual business, it's a great business. It's different from the type of sales I was in before, where it was always, there was no residual. It's the type of business where it's very little upfront, so it takes a while to build it up because, if you have no residuals coming in, you just have new business commissions, and those are going to be very small, but you keep building them up, and so hopefully what you've done last year is still paying dividends this year as you're focusing on new business.
Okay, great. Besides the residual income, why would someone want to become an insurance agent? Why did you decide to make the leap from your former sales career?
Yeah, so I definitely didn't wake up or like when I was a little kid say, I want to be an insurance agent. Although my daughter is kind of saying that, but because she sees me, but it's just something I kind of, for lack of a better word, stumbled into. My previous career, I was in retail automotive sales, so I sold new and used vehicles. I was very good at it. I was one of their top sales folks. I sold vehicles for a period of about 11, 12 years, from age 20 till about maybe 32, something like that. And I kind of got a little burnt out on it. I was ready for something different. So I reached out to a couple of places. I really liked Farmers because the more I researched Farmers as a company and as a brand, how dedicated they are to their clients. I researched, come to find out that they have, at the time, and still now, the best claim service. And so it was a lot of things about Farmers that attracted me to Farmers. And the long story short, they liked my selling background, and they gave me an opportunity to open up my own agency from scratch, and which is not the typical path. Most times the path is to work at, an insurance office as a producer and kind of learn the business and then perhaps go from there and open up your own. But I literally had a chance to just start from scratch. And from day one, although I had no clients, but it was my business with no clients from day one, and now fast forward to the day, I certainly have, my phone rings constantly and, north of, over 1,000 plus policies in force. So it's a pretty decent bit. So far so good,
Mm-hmm. Okay, so you think you're gonna retire as an insurance agent then?
I'm still young, and so I'm still young. I have energy, so I have no intentions of retiring anytime soon. Probably in the next, I'd say God willing, I'd probably say 15, 20 years. I could probably do it a little differently than I'm currently doing it, but I have no intentions of retiring. Zero, none. Yeah. So, and so, as I mentioned, Farmers Insurance, I give you guys a little, since we're on a little podcast, I give you guys a little backstory about Farmers Insurance. And one of the things that attracted me to it, I mentioned that when I researched, Farmers had an award for having the best claim service. Well, once I kind of became an insurance agent, they sent me off to California for a week of training. They took me into a back room that had a stack of, money, all stacked up in the back of the bill. It was like just full of money, right? And all singles, by the way. And so I was kind of like, well, what is this about? And so the story goes, back in the Depression era, the CEOs of Farmers at the time, because Farmers been around since 1928, they had headwind that there was going to be some sort of recession or depression or some sort of money crunch. And when that happens, you typically can't go to the bank and just withdraw or take out a loan.
Mm-hmm.
You can certainly withdraw your own money, but you can't take out a loan. And insurance is done. I mean, banking and insurance goes hand in hand. The insurance carriers use the banks to settle claims all the time. It's just a relationship. So they withdrew about, I want to say it was $50,000 of all singles, which back then was, I don't know the number. That's probably maybe it was probably close to $1 million. Maybe, I don't know. But the point is, when the recession hit, we started paying claims with that money, whereas none of the other insurance companies were paying claims. So all the other insurance companies were nickel and diming their clients and looking at, say, hey, I'm sorry about that car crash. They're waiting till the very last day to pay the claim. And even when it's time to pay the claim, they're saying, well, look, that fender, I know you're saying it's $15, but you can find somebody that'll fix it for 10. Here's 10, here's 7, here's 8. And here comes farmers. We look, say, yeah, we see your fender's messed up, pay them cash on the spot, and we're gone. And so at the time, there was no mass media like there is now, but word of mouth was really everything. And you have folks walking around with money in their hands from a paid claim, and none of the other carriers were doing that. And so farmers realized, gosh, if we make this a business philosophy, if we handle claims the very best, that'll carry us through. And that's been farmers' philosophy. And that's one of the reasons I kind of, it is one of the reasons I joined farmers. It's really because of how great of a job they do when it comes to claims.
Okay, that's great. That's one reason I have insurance. It's something that nobody wants until you actually need it.
That's right.
So, speaking of trips, you've actually earned several different trips with Toppers Club. Tell us what the trips were and some of your experiences and training that you got from earning these trips and how you earned the trip.
Yeah, good question. So my very first year as a farmer's insurance agent, I had, I kind of exceeded expectations as it relates to life insurance production. And I wrote more life insurance policies than the average. I mean, far beyond the average. And that in and of itself put me in the top in Toppers Club, which is like the top of the top for farmers insurance agents. And so they flew me out to Washington, D.C., me and my ex-wife at the time. And, it was a great, kind of award ceremony, but it was also networking with other agency owners from all around the country who are at the top of their game. And, in an open forum, just kind of, as we're eating dinner or looking at a concert or whatever, just, shop talk in terms of what works well for their agency. And so it's really for, that is the best thing that comes out of it is just, networking with other agency owners who are passionate about what they do and they do it well. And it's a great opportunity to kind of, pick their brain. And so that was one of the biggest things that I got out of it. And then I went to another Toppers Club about a couple of years ago in Texas. And same thing. I mean, just blown away by, some of the things that folks are doing around the country. And if you can hang out with the best of the best and, network with them and, share and exchange ideas in a non-threatening manner, because I'm not in their backyard. They're not worried about me stealing their clients. So it was great, and I had a chance to, I've done that twice.
Okay. So you had mentioned getting burnt out from selling cars. I'm not sure if that's from not receiving the residual income or not, but what keeps you from getting burnt out from selling insurance?
So let me just talk a little bit about insurance. And Nancy, you're aware, certainly aware of some of the different products that we have. But I think what's kind of kept the wheels turning is just the different suite of products that we offer. And there's always something new to learn, and there's always, a new need. So, I mean, just, some of the products offered is, like, okay, we can say, well, home insurance. But within home insurance, there's a lot of different facets of home insurance. An
Right.
example is, I insured a home before it was built. I'm insuring the construction of a home, which is basically what's known in the industry as builder's risk. So, it was a very fun endeavor, and it wasn't my first time doing it. I've done it before, but to literally go off of plans, in terms of how a house is going to be built, look at the cost involved, underwrite the contractors that's going to be doing the work, and then issue a policy that covers calamities that may happen to that home while being constructed. And that's just one facet. I mean, anything as it relates to a home, whether it's if somebody's rehabbing a home, they have different insurance needs because they're going to be buying that home, spending some money to rehab it, and I can come in and just insure that particular endeavor. I can insure vacation homes. I insure, landlord endeavors. I insure commercial buildings. So just as it relates to property insurance, there's so much to it, that it keeps you going. Like, even I've been doing this for 12 years now, but I've been researching the different types of homes, because you think, okay, well, this home is a 2-story home. Okay, but is it a colonial? Is it a Victorian? Is it a Cape Cod? Is it a Southwestern? Like, there's just a lot to know and learn, which is very fascinating. And that kind of keeps me interested and in tune, I suppose. But also business insurance. We're writing business insurance, so we're insuring things like restaurants, things like tech companies, believe it or not, all types of different endeavors, so just all out risk management. Most folks, when you think insurance, life insurance certainly comes into the mix. When I started off as an insurance agent, I certainly was able to write life insurance. In fact, I went to Toppers Club based off my life insurance production. But then a couple of years later, I discovered that there's a type of life insurance that I cannot write because I don't have a securities license, and that's what's called a variable universal life policy. And think of it as like a 401k almost. You know how a 401k, your funds are invested in the market to create a return. Well, it's a life insurance policy that kind of does the same thing. It literally takes, excess premiums and invest them where a client gets market participation. And so a couple of years later, I said, well, gosh, I want to be able to write those. I can't offer my clients that. So I had to get a Series 6 and 6.3 just to be able to offer my clients this one particular product, which was a 6-month endeavor, by the way, in order to do so. But then that also opened up the door to be able to do, financial services as it relates to mutual funds. And so that's been very helpful. In the past, I've even done, when I've had some team members, I've done their own kind of mutual funds as part of their compensation package. I've done, and I've actually had clients who started off with just a little bit of monies, and we look up and they're starting to accumulate, nice amounts to add to their retirement and so forth. So it just always seems like there's something, new, or a new path, if you will. I've also mentioned it in addition to the different insurance services that I offer. I took, the American College was offering what's called a designated course. So it was a 2-year study program. But if you complete it, you earn a financial services certified professional designation, which is designed to kind of set you aside, apart from the rest of the professionals in the industry, just showing that, you're a little bit, you don't just offer products and that. I mean, you really study these products and you know them in and out. And so long story short, I took the course, and I also took the course because it also counted towards my CE credits. So I figured, well, if I'm going to take CE credits, I might as well take these courses. I get CE credits, but at the same time, I get a designation too.
Exactly.
And so, long story short, I've done that, and I've earned a certified financial services certified professional, which I'm proud to have. And even in modern day, I mean, during the pandemic, where there's not a lot of restaurants to go to and there's not a lot of things to do, farmers right before Quicken Loans went public, they or maybe slightly after they went public, farmers and Quicken Loans partnered up, and they launched kind of a partnership program where farmers agents can also be a mortgage loan originator for their Rocket mortgage division. And now, in order to become a mortgage loan originator, that's it's probably like taking an insurance licensing exam multiplied by about 2, maybe 3.
Okay.
But the long story short is during the pandemic, when restaurants are closed and so forth, I just in the evening I studied and got fully licensed to originate loans, and I just launched or announced my relationship with Quicken Loans, and I've been accepting applications and getting folks pre-approved so they can purchase a new home or refinance their existing home, as rates are at historic lows due to this pandemic that's currently going on right now. So that's been fun and exciting, and it's really a new toy to play with, as it relates to insurance and financial services. In addition to all the different products that I offer, I can also now help a client reduce their mortgage payment, or help a client with a reverse mortgage, or help a client if I look and say, gosh, you need another roof on the house. Let's take out a loan so you can get that new roof on the house, And so,
and you can turn around some homeowners insurance.
Yeah, right. And at the same time, still writing the homeowners insurance. With it was almost like the further I like, God, sure, it's not a conflict of interest. You know what I'm saying?
Exactly.
But oddly enough, the way the mortgage industry is going, I mean, there were a lot of when I took some of the classes with Quicken Loans, because the course load was crazy. Let me just start off by saying that the course load was, and I'm the only farmers agent that I know of in Michigan who dared to take the plunge. I don't know any other farmers agents that did it. I think I know there are some. I want to figure out who else is doing it, but I think I was the first one to kind of break through the glass in Michigan anyway. Mm-hmm. But no, it's an awesome, opportunity to, serve clients and deepen the relationship and provide service, if and when need be. So again, I've been excited with doing that. I mean, heck, not just that. I mean, I also last year, I took the plunge and also added health insurance into the mix. So for my clients who perhaps does not have health insurance through their employer, sure, or maybe have it through their employer but want something, want to compare pricing, because health insurance through the employer, if they have to pay for it, it's still expensive. So that's something else that I've done, and believe me when I tell you I'm leaving some stuff out. But so it is a constant. It's a constant study. It's a constant undertaking. There's so much to know and learn and do within this industry, and I just been kind of moving along and you know, learning some new stuff, applying it to the marketplace, hoping to serve, you know, making sure it serves my clients well, and continuing on from there.
Great. So you got plenty of things to keep you busy.
Yes.
And several different products to be able to offer your clients.
Yeah, you know, it's almost like even when I come back in contact with a new client, or a client comes into my office, you know, like, oh, by the way, I do this. Or by the way, I offer mortgages. Oh, by the way, you know, business insurance. By the way, such and such. Like, are you like the Desmonds? You know, or like, are you Jamaican? You know, the Jamaicans will have like,
How many jobs do you have?
15 different jobs.
Right.
You know, so I'm, you know, that's kind of like, you know, I'm like the one of the Jamaicans, if you will. You know, but no, it's cool. You know, I don't know. I feel good about it, and you know, and so again, that's just one of the new toys. Or I call it a toy because, you know, to me it's a little fun. I've been enjoying this stuff. I mean, I'm learning about USDA loans, VA loans, reverse mortgages, the credit requirements for these type of loans. So there's a lot of folks that are currently renting that have no business renting. I mean, you could pay less on a mortgage than you're going to pay in rent.
Right.
Credit score requirements 580 and up. Okay, so low 600, hey, let's talk, right? Believe it or not, there's in rural communities, there's such thing as USDA loans that have the credit score requirements is low 500s. Down payment requirements, there is no down payment requirement. Now, these are very rural communities too, by the way.
Right.
Okay? You know, but that's interesting and fascinating to know, right? And you could mortgage on, you know, land. You can mortgage a trailer. You know, it's just a lot. You know, so it's very fascinating to me to learn that end of it. I'm able to issue verified approvals. So, you know, I got a couple of realtor friends, you know, let them, you know, one of the realtors sent me a client the other day who was getting ready to do some home shopping. Within about 30 minutes, you know, get her pre-approved to do so. And then we take it a step further and we'll do what we call a verified approval, which basically at time of offer, hopefully their offer will carry a little bit more weight as it shows that their approval is verified, which lets, you know, the selling realtor know that this will be a quick and easy loan to close, or it'll be a quick, you know, closing process. So, you know, and I think a couple of years ago, I was just in the market to purchase. And I seen that side of it as an anxious client trying to buy a house, you know, and going through all the emotions of as soon as you pull up, the house is gone, you know, or somebody bought it already, you know, and so I'm just excited that I can kind of, you know, help my clients out in that fashion as well. So again, just another, you know, and I think in today's, you know, although things are kind of with technology are getting somewhat quicker and we could meet over technology, but, you know, the need now to have an agent with the changes that have happened in Michigan. Now we have a lot of different medical options, and that, you know, folks really, you know, the need to have an insurance professional that is local, that you have access to help, it is important now more than ever. You know,
does Rocket also offer a commercial loan as well as that through a different department, commercial properties?
Yeah. So for me, my focus with Rocket Mortgage is just owner occupied properties.
Okay.
They certainly offer landlord properties, but I'm currently not doing any of the landlord financing at this juncture. But if I had one of my clients who wanted to, I would still funnel them up through Rocket Mortgage. It'll probably be a Quicken Loans representative that would then liaison and take care of it from there. But my focus is owner occupied vacation homes as well. Not necessarily the landlord endeavors, not necessarily the package mortgages. Like I just had a guy who has about 5 homes, and he just packaged everything up to do one mortgage on 5 homes. So that's not certainly not my forte. But I mean, believe me, like I said, what I'm doing is, if I couldn't help that investor out with a landlord property, I would get them over to Quicken Loans, and they would, and then I'd turn around and ask, well, hey, what about your primary home? What's going on with that?
Right.
That's where that's where I come in at. I mean, I got clients that are paying. I looked at a month ago. Somebody paying a 4.7% rate on their home, which those are the common rates, but now rates are in the twos. And so you're talking about a night and day difference right now when somebody looks at doing a refinance. And again, I think people unless you've inquired, talked to a mortgage professional, I think people don't know how easy, it is, to buy a house, or perhaps refinance their home, as well. So anyway,
Right.
it's, so again, for me, like I said, another tool in the toolbox, and for me, because again, I have fun with this, another toy to play with.
Right. What about new construction? Does Rocket, the partnership, offer loans with construction as well?
They do, but it's going to be 2 types of loans that's going to be involved. You're going to have a construction loan that's going to be time limited, okay, and then you're going to have a loan after the home is complete, okay. So
Wow.
yeah, so it's going to be 2 types of again 2 types of loans that's going to be involved there.
What if the house is already built, like a model home spec house?
Yeah, so the spec homes are perfect. Yeah, the spec homes are ready to go. Oh, absolutely. So somebody could take, let's just say it's what they call a spec home, and which something I just learned about. You're a realtor, so you know more about those than I do. But ex-realtor,
former realtor, former insurance agent.
right? Yeah, former realtor, she's probably still realtor, insurance agent, business owner.
I'm a Jamaican too.
Right, exactly. You know how I go. You know how I go. So the spec homes are basically the homes that been, a builder comes in and they're going to build all the homes with maybe 2 or 3 different setups. And so what happens is the cost per square foot is a lot less than if you went in and said, hey, I'm going to have a house built from scratch. So I'm insuring the construction of a home right now in Southfield that's being built from scratch. That's not a spec home. So the cost per square foot is going to be a lot more. However, the buyer was able to pick out, all their amenities, from start to finish. It won't look like the house down the street. It won't look like the house across the street. This is going to be its own unique home. And then they do what they call custom spec homes too, which is basically a spec home, but then it's customized to your liking. Still a little bit lower per square footage. But in those cases, to insure those, you typically need, while it's in progress, a builder's risk policy. That's something that, depending on either the client can purchase, depending on their involvement at that point, or the builder can purchase. If it's a spec home, more than likely the builder is going to have a builder's risk policy. If it's a spec home, more than likely the builder is going to have some sort of financing in place. and they may require the buyer to show pre-approval, perhaps put a commitment of down payment down, that type of stuff. So all these situations and scenarios are different and unique, and they actually change per township too. So what goes on in Oakland County, believe it or not, is different than what goes on in Macomb County, and it's going to be different than what goes on in Wayne County. The inspections that's going to be required, the permits that's going to take place. So, it's not all, it's not all cookie cutter.
Right.
It really is not. It's certainly case by case. Mm-hmm.
Okay. Congratulations on all your new endeavors with farmers. Like I said, every time I talk to you, y'all are doing something different. So that's good. Let's just pivot really quick to marketing, because I know that's a really big deal with business owners. How did you begin to market your business and gain customers in the beginning of your business?
Yeah, so that's a good question. So I started off again as a car salesperson, and I had a newsletter. It was called the Blackwell Times when I was selling vehicles. And so I would send out about every quarter, I would send a newsletter out to all my clients. And I've done this for years when I was selling vehicles. And so folks kind of knew, and so I just had a habit of sending a mail and correspondence. So when I transitioned into opening up an insurance agency, I immediately took that same database of folks, and I started sending flyers to let them know, I'm an insurance agent. And so I started off with a ton of mail, and then from there I started visiting all the dealerships that I had friends at. From working in the car business, you have relationships with other salesmen, and so they would send me clients, so that's kind of where I started from, and then I would participate in all the different marketing opportunities that farmers had at the time. Once I got rolling, they gave me an opportunity to participate in a marketing program that basically sent mail. At the time, I think it was about 1,000 pieces a month to the Southfield area and other zip codes. And then with that, there was phone numbers that I can call. And then at the time, I even had a marketer call, and the different phone number, the phone numbers of the folks who received the letters. And then sometimes they would just get a letter and call as well. So that, and then on every client that had an opportunity to write, I would immediately, the first thing is to really do a great job by the client, make, under promising, over delivering, wherever possible. And from there, earn the right to be able to ask for a referral. And you're not going to get a referral if you did a horrible job and they don't like you, right? You're not. So if you can do a great job, they gotta, they understand what they have. They see the distinction between what they had, if they didn't have an agent before, because a lot of clients nowadays don't have an agent, versus having one. And then from there, hey, who you got? You got a family member who could use this type of service. You got a relative, a friend. That your mom, she has a house. And so asking for referrals, and so at any given time, I kind of had about 3 or 4 different marketing lines out. One out to the dealership, one out to clients who purchased vehicles from me in the past, another one out to the mailing, sending mail to the community, another one with existing clients who have came through the door and purchased, and getting referrals from them, and I'm leaving some stuff out. And so all these things kind of happening at the same time, certainly kept the phones ringing, and it kept things moving and kept me building.
Okay, great. Well, you're actually one of our original DBHG members. You've pretty much been with us since the beginning. You attended a couple of our networking events. So tell us how important network marketing is to being a insurance agent or in a different sales career.
Yeah, relationships are definitely important. Anytime you have an opportunity to network with other professionals, um, uh, it helps. There's a lot of professionals within the Detroit Business Hub group. I've came in contact with a lot of realtors. It seems like there's a lot of realtors within the group, but I've met some finance professionals. Not I got a Series 6 and 6.3, but I met a gentleman in the Hub group who has a Series 7s and some more series, and has been doing a lot more than I have. Who's I've gained from some of the things that he said, and so yeah, Detroit Business Hub Group. Anytime you have an opportunity to network with other professionals, it helps and it doesn't hurt. And talk to folks who are in the trenches, right? Who are building their business like you're building your business, or maybe they're ahead of where you're at, or maybe they're behind where you're at. You have an opportunity to kind of say, gosh, when I was in your shoes, I did this, that, the third, or here's some things you want to look out for, and so, I think it's great. I enjoyed, there was a young lady who owns a hotel, and I forgive me, I forget her name. Yeah. Comes right out of King High School, and I know she did investments in that prior to, and so to have folks local within the community, most times by the time somebody gets to the point where they're purchasing hotels, you don't even, you may see them on television or something, but to be able to kind of have a Q&A with them, how cool is that?
Very cool.
Mm-hmm. Mm-hmm.
Yeah, it was great to have her. Yes. Hopefully Shannon will continue to partner with us in the future. We do have an upcoming event on April 23rd. I know that you have other commitments, so you can attend. However, I do appreciate you, making a plug for network marketing, because I think it is really important. And starting out in the business, if someone doesn't have a lot of startup capital, it's one of the best ways that you can start a business, because it really are a lot of your initial sales are going to come from your circle of influence and people that you need to introduce your business to.
Yeah, so it's one of those things that you'll only know in hindsight, right? Like, I'm thankful that I didn't have that much money starting. I mean, I'm thankful I had a little bit, but
Right.
let me tell you, the more I would have had, the more I would have blown.
Right.
I mean, I would have spent more in advertising. I would have spent
billboards.
Yeah, and so the one thing about that you must develop is going to be resourcefulness, and that's the ability to get things done with, maybe not with outright capital, but with relationships, with innovation, with a mirage of different things. And so, starting with without a lot of capital, it can sometimes be a blessing. And what that's going to do is it's going to force you to really learn your craft, to really hone in on in the most efficient way possible. If I said, well, gosh, here's $100,000, go ahead and get started. You just, okay, well, you just hire everybody to do everything, and okay, great. Right. Let me spend $10,000 on the radio. Let me spend $10,000 on the billboard. Let me, you're just great, and not necessarily knowing. Yeah, and I'm gonna tell you, I talk to folks who come into money, and I'm about to open up this. I'm about to jump into real estate. Don't know the first thing about real estate. Clueless, right? And you think you're gonna compete with these folks who know this game in and out. Who see deals before they they don't even hit the market, right? You're
Right.
clueless. Like, you don't even know how to evaluate property. You don't know, like none of this stuff. Like, so you don't know whether it's a good
A
deal,
good
bad.
deal or not.
Yeah, and let me tell you, business is hardball. It's not softball. So you got a lot of money. Guess what? They're gonna take your head off. You know what I mean? You're getting a great deal on this 4 unit. Oh, you're gonna make so much money off of this thing. I mean, are you kidding me? Like
Right.
you would, by the time you halfway figure it out, and oh gosh, I did this thing wrong. Let me sell this building. What? I can't get nothing for it? Or not? I mean, I paid 300,000. You talking about 70? Really?
Right.
But this is, so there's just no. I think in life, there's just no shortcuts. There's no such thing. There's, don't if it's easy, like don't never take the easy way. Like always just take because the harder way is going to build more character, is going to build more resilience, is going to build more, I'm saying this in terms of what I'm learning myself. But it's to the point I don't, if here's easy, here's hard. I'm going to look towards the hard because that's where if it's easy, everybody can do it. I don't want the easy way out. Because I realize, like I said, there is no shortcuts. There's just, it doesn't exist. What they call it, like the 6-minute abs. There's no 6 minutes. I mean,
Sign me up today.
Right, what I'm saying? Like, lose 20 pounds in a week. You know what I'm saying? Like, take this pill. It's easy. It's simple. Like, and by the way, if it's that easy, you're not going to be, you know what I'm saying? You haven't really paid. You really haven't paid the cost,
Right.
Like, there's no free rides, and, so anyway, that's my rant.
No, that's very good advice. I would say like one shortcut you could take is mentorship, and we've talked about that a lot before. Someone who's been down your road and path, it can kind of steer you and guide you so you don't make the same kind of mistakes. So sometimes people find that does accelerate their success. What do you have to say about that?
No, so mentorship can be huge. I think it's a balance. I'm more, I think it's a balance. But if you can find somebody who's walked down your path, okay, and glean some insight, absolutely. If you're fortunate enough to surround yourself, the Hub Group is a great network of folks to surround yourself with. I think the Hub Group is good for even not necessarily from a mentorship standpoint, but to have access to, an accountant, to have access to a attorney, to have access to, an insurance professional. There's I can have a conversation with somebody that, depending on where they're at with their business, that I know would take, some time and grief, off of them, things that they maybe should set up at this point or should not set up at this point. So to have access to that, but then mentorship, no, if you can find somebody who's walked your path or are where you're trying to go,
right,
by all means. Now, if by all means you want to take that path, but don't, certainly, but the only one that's going to be doing the lifting is you. You got to remember that. It's like, with a workout program, you got to lift the weights. You know what I'm saying?
Right.
And you gotta cook the chicken with, no salt on it and eat broccoli. Like, nobody can do it for you. People can advise you, right, and what work for them. But then you have to be wise enough to say, okay, what was their market? What is their center of influence? What is their natural strong points versus your natural strong points? Some people jump into my arena with an accounting background, okay? And so, they look at the numbers all day and they study that, and that's how they manage their business. They know if they get the numbers right, everything else will fall in place. And for them, that's what works. You have some folks who do well from a people management standpoint, and so they manage. That's their strong point, and that's how they operate and run their business. You have people like myself who operate from a salesmanship standpoint, and that's been my strong point, right? And so, and you have different demographics, you have different, so you can certainly listen to folks who are where you're trying to go, but you have to weigh a little bit of everything because there's no one size fits all. And let me tell you, and being around other agents who do this thing successfully in other markets, I mean, they have all different approaches, you know what I'm saying? But they got all different clientele. If I'm in Southfield, if I pack my office up and went to Bloomfield Hills, as I know you did, clientele is going to be all different. You know what I'm saying? And, and it's going to be a different market. And, I would have to be able to shift to cater to that community and that market and what works well for that particular area. Transversely, if I pack my office up and say, you know what, I'm moving out to Clinton Township. Okay, again, unless so everything plays a part. Everything does, So
you said before that most of your clients, including myself, are women. So where did you find your clients from?
I don't when I say I don't, so a lot of it is at this point the phone just rings. I got a great website presence, and I don't know. I think that it's been a personal observation of mine, and it's older. I'll say my client, I would probably say 50 to 60-year-old women it's been like the majority of my client base. And I have plenty of men, I have, and younger folks or whatever. But if I said, what's my strongest client base?
Yeah, your demographic.
That I don't necessarily target or market to or whatever, 50 to 60-year-old women. Now, transversely, insurance concerns women more than it does men. Men are aren't as concerned as it relates to insurance. I'm making a generalization, so let me just say that based off of my window that I can look out of. But women kind of get it a little quicker and sooner, and they want to be secure. They want their affairs in order more so than men on average. But there are some guys who want to make sure they got their ducks in a row, and this and that, the third. But overall, ladies. I think insurance as a product, resonates more with ladies than it does men. Men, from my own personal observation. But I've talked to agents. I was talking to a lady, and she's like, "Well, most of my clientele is men."
Right. It's kind of like the men's salesperson, the man who sells the women's shoes in the women's shoes department. So it might just be the opposite sex is more attracted to you. Who knows? I had a mix of both. I had women in families, so I don't know. But if it came between the husband and the wife, usually the husband's the one to stop by the office.
Okay. Yeah, and I'm a big proponent of dealing with the whole family. So I try to but very rarely. Let me tell you though. Yeah, it's normally the wife that is stopping by the office. It's normally the wife that's taking a look at the renewals. Maybe the guy might be paying for it. You know what I'm saying? But it's normally the one. The woman who's kind of who's managing things. And there's more men that have to check with their wives than there are wives that got to check with their husbands.
The women are usually a lot of times in the family, the woman is the one that manages the money. Either she's a single mother or, her husband could be making, X amount of dollars and she's a stay-at-home wife. either way, I feel like a lot of times a woman's in a position to manage finances in the house.
Yeah, as it relates to life insurance, the woman is a driver of that product.
If you look at the mortality tables, the woman is probably going to be the one who outlives the man. So that's her natural interest to make sure she has life insurance.
Yeah, like you talk to the woman with children and say, okay, well, what do we have on the husband for life insurance? We need some life insurance on him. Because,
Oh yeah.
And so he's kicking and screaming, you know what I'm saying? Like, what we need this for? In case you die. What do you think? You know what I'm saying? But women get it far, as it relates to especially life insurance. I was talking to a young guy, earlier, this is 2 weeks ago. And, he's a young guy. He's just had a baby. He got I think his baby just turned 2. He ain't got no life insurance, and by the way, he still didn't get any life insurance. I'm like, bro, you got a 2-year-old, like you got a kid, right? Come on, like it's time to, you know what I'm saying? Like playtime is over. Yeah. You know what I mean? Like you gotta think about this type of stuff, you know what I'm saying? And then sometimes there could be, in the urban community, there's, marriage, maybe not, and so you have the, the baby mama scenarios and, I don't want to leave her no money. Ain't gonna be getting no money off me type of deal. You know what I mean? So
you have some men who feel like if they leave money to their significant other or wife, that the woman's gonna have money to spend with another man. So unfortunately, it's a bad path of thought, but that's how some people think.
Yeah, but so a big part of it too is you got to have, you got to. I've gotten comfortable with tough conversations, and I'm talking about even with my family members or friends or whatever, to the point like I was talking to somebody in kind of a celebratory fashion and this and that, you know what I'm saying, and I was just like, all right, well, think about it, man, like dog, you gotta get some life insurance, man. Like so what's gonna happen to your daughter when you pass? Exactly. If something were to happen to you, and he couldn't afford $30 a month, you know what I'm saying? To make sure I was straight. He couldn't afford $40 or $50 a month to make sure that I had this, that, the third, and he was like, man, don't come at me like that. Why you? I'm like, bro, but he wound up getting some life insurance from me. He's still a life insurance client to this day. In fact, they just closed on a nice house, him and his wife. So it's really you gotta get comfortable, because nobody wants that. Like I almost pull the hearse up to the desk. Like you see this hearse, you're gonna be in it one day. Okay. You don't know when.
Hilarious.
You know what I'm saying? Like I'm the Grim Reaper over here. You know what I'm saying? Like, you're gonna die.
Have to have these conversations because it's either you have the conversation now or you have a family coming to you asking you for a donation for a spaghetti dinner. It's just, as an insurance agent, you almost have an obligation to your clients to at least mention to them, give them facts, and then let them make an educated decision. But a lot of our people are just miseducated; they just don't know.
Just our way of thinking. You said, well, gosh, all right, well, let's talk. So you have no life insurance. You got your smartphone, right? You got insurance on your phone? Yeah, I got insurance. Yeah. So let me get this straight. Okay, for something that's really taking money and time away from you in a lot of different ways and whatever. This is a $600 phone. You have insurance on it, but you don't have no insurance on you in case you die.
Right.
And so you really got to have, like I said, and nobody wants to think about their own mortality, let alone start allocating monies for it, right? And so that's a whole different conversation. Say, I'm going to think about it. I'm going to start, not only am I going to think about it, I'm going to start allocating resources towards if it does happen or the untimeliness of it happening, right? But transversely, the more and more comfortable. First is like it was initial shock. Okay, it was an uncomfortable conversation. We break through the glass. Yeah, we got some life insurance in place. Woo, we can breathe a little bit, right? And then we
Right.
look up a couple years later and say, well, gosh, we have this life insurance policy in place. We're borrowing, and it's a temporary life policy. Let's see what we can do on the permanent side of things. It's going to add to your retirement. Let's take a look at investing through your life insurance policy. So it's just a kind of like there's always like a stair step and always kind of like another level to it.
Right.
You put these things in place when a life situation happens. I'm telling you, you have a lot more peace of mind. The last thing you want to have is, you realize, what I'm saying, something, has come up, or you got 5 or 6 months to live and you don't got none of your business happening. Now there's nothing you wouldn't do to be able to sign up for to do what you should have done. I mean, there's no price you would not pay at that point, right? But if you take care of the business ahead of time, you'll be at peace, right?
Mm-hmm.
I mean, literally, like I'm a young man, I've looked myself in the mirror and said, I mean, if I die today,
Mm-hmm.
hey, I've lived a fairly decent life, and I haven't left any boxes unchecked. And
Right.
as a young man, I have a feeling of comfort and peace. I want to live a long time. I pray that I do, but I got 2 young daughters, what I'm saying, and an ex-wife that's still raising my kids, and I share custody too, but that's another story. So no, the feeling of, and not just as it relates to life insurance, but really as an insurance professional, I'm helping folks kind of arrange and put their affairs in order, and put their house in order, put their finances in order. And the more and more you do that, when stuff comes up, you just sail right through it. When a pandemic hit, I mean, I wasn't stressed out about money. I wasn't stressed out about, I'm not because I make so much money or this and that. I do well I do well, but just because I lived, I budgeted, I lived within my means because I took care of what needed to be taken care of. I sacrificed. I did things the right way. I arranged my affairs. So when struggle hits, I'm cruising right over it, and then, and the feeling that I had, it just doubled down. It just reinforced, okay, what I need to be doing with my clients. They need to have that same feeling of comfort when calamity hits,
Right.
but the only way you don't get it, there's no magic pill. It's a process of taking care of stuff on the front end, the better job we do on the front end, on the back end, it's a breeze. Or life is still going to be whatever, but at least you don't have these, like I said, now you got your family's grieving and they got to sell shit dinners to put you away, but they showing at the funeral, or not if it's a cremation. They got a picture of you with, bottles of champagne in your hand, and Cartier glasses on, and, and it's just kind of like, well, dang, we had all it, like, bro, you couldn't, why did I have to kick in for you to be put away in? It really tarnishes your legacy, right?
Yeah, absolutely.
Yeah, and I'm showing folks, and a lot of it too is knowledge of. I'm showing clients when they have kids for about $35 a month. Okay, we start up a college saving. Well, I'm not gonna call it college savings, but sometimes the priority is about saving for college. But I'll show them a cash value life insurance policy that has market participation that'll turn their kid into a millionaire when they're getting ready to retire. $35 a month. Okay.
Mm-hmm.
And I have grandparents that are planting these seeds because sometimes the younger generation doesn't quite get it. right?
Right.
But sometimes the grandparents have a little bit more foresight, a little bit more wisdom, whatever the case may be. So I got grandparents that are purchasing these type of policies. If we want to have a conversation about building wealth, is not going to be for the person that's building it. By the way, so when you think attempting to build wealth, it's going to be a process of building a legacy for your kids, which is really about building habits.
Absolutely.
It's not this bling bling. It's not what you see on television.
It's
Popping
not living
bottles.
in the moment, not thinking about the future.
Yeah, it's so it's an old saying that I've heard that rich is loud, but wealth is a whisper. So if you think back to some of some of the wealthier people that even when you were doing real estate and insurance, some of the wealthiest people that I've ever met.
Yeah, they drive compact to mid-size cars and not around with luxury vehicles. They usually live a pretty modest life.
Sure, and by the way, because you'll never accumulate wealth showing all your money and living it, right? But then at the same time, you'll never keep it living that way as well. So it's transverse. And the biggest thing that you need to have is temperance, the patience, and that's a muscle that only gets developed by by exercising some self-control, and we all have vices and everybody has different vices.
Right.
Your vice may be clothing or trips or cars, or we all have them, but the wealthy folks learn how to keep their vices in check. They manage them. They have wants and needs and desires, but those things have a priority to them. So it'll be if it's a couple of years, it's a couple of years. If it's 5 years, it's 5 years. But they're not going to sacrifice wealth or their nest egg or what they're trying to build and achieve for some unthought, something that's not really well thought out, well planned, and so forth. And they're patient. And when they do when they do make that purchase, they get a phenomenal deal on both sides. When they buy as well as when they sell, they have patience. And so that in and of itself is something to they're not impulsive. They're not, but you have to have your impulses in check,
Right.
So, and believe me, I'm a student of it. I mean, I'm learning as I move through and go through life myself, but
it's a lifelong journey. So in other words, you're saying a lot of wealthy people exercise delayed gratification very
well. A wealthy person, there's the only way you're gonna get there. You know what I'm saying? There's no other. There's no other. Even unless you like Prince Harry, or you know what I'm saying, or
you're born into wealth.
Yeah,
well, even then, if you don't have delayed gratification and live on the side, you can easily lose it, no matter how much money you have.
Yeah, I mean, it's to the point where unless your parents put their, because there's things you can do. Like if you're a wealthy person and you have your kids, and really what you're trying to do is you're trying to groom them to be able to carry on this legacy
on. Yeah.
Right. And which, by the way, you get more and more serious about it, the more and more morals you put in place. So you start putting these life insurance policies together in place. You start investing and you start doing all these different things, and you start saying, well, dang, I mean, they're gonna be working with something so let me, you know what I mean?
Right.
So you start to like, okay, well, if they see me blowing money fast, that's what they're gonna do. Right. And so you really the more and more you start putting things in place, the more you start looking to the future, the more you start checking your behaviors now. But then at the same time, if you got a kid and they're gonna blow as soon as they get it, and then as an adult, you start putting things in. There's mechanisms you can put in place that will kind of, and these are your trust fund babies, right? These are your trust. So you put, okay, well, the house is taken care of. You can't refinance. You can't touch that. So you got somewhere to stay. I got a nest egg, but you can't touch it. You're gonna get $1,500 a month, right? And so you still got the parents that are still like pulling the strings for this adult child, basically.
Right.
But this is
before, and it's like your kids, right? So the spenders and the savers and what type of habits they develop. And unfortunately, or fortunately, depending on which side you're on, a lot of those spending and saving habits develop at a really young age. So as soon as you start paying your children an allowance, hey, that's when you can start teaching them about tithing, if you believe in tithing, saving, investing. But because a lot of our parents didn't have that home rearing and background, they're not able to pass it on to their generation. So we just continue this, these generations of miseducation. But you can always break that cycle and start with you.
Sure. And there's a lot of different sayings. Like they'll say, and I may articulate this the wrong way, but they'll say the first generation earns it, the second generation shows it, the third generation blows it. And that's a common phrase if you talk to like investment, folks or like folks. So like you take a third generation business, the grandson has run this thing into the ground. You know what I'm saying? Like he's, he's expense accounting everything, and he's, he's driving big company cars, right? Like
and all that.
he is, he just, running things, but even with that, they have their own issues, right? And it's typically a 3-generational. You got the first generation earns it, second generation shows it, third generation blows it. If you can build something,
it's 2 generations, but we have plenty of Michigan examples of Michigan businesses where the parents either retired or one passed away or both passed away, and the children didn't want the business, so they sold it or gave it away or whatever. And it's just a real tragedy because they weren't willing to put the work that their parents put into it to continue the legacy.
Sure. And then even let's talk a little bit about kids. Like I had a really sharp couple in my office last week, and so they got 3 parents that are still alive, right? Husband, wife. 2 of her parents are still alive. 1 of his parents still alive. So they came in and say they bought life insurance on all the remaining parents that are still alive. And they said, we got our investments, we got this and that, but this is a sure bet. Like we know our parents are going to die, right? I mean, it's guaranteed, right? And they didn't not necessarily come from wealth or anything like that, but again, your parents are going to die. They're all of them are in retirement. Why burden them with, hey, can you buy some life insurance because and let me tell you the reaction. These grandparents or their parents were elated to, what do you need? Hey, you buy as much as you want. Thank you. Hey, I'm glad you're doing it. What else you need? Call me back if you need anything else. No problem. I'm like, wow. Right. So then we go to the next. Hey, yeah, no problem. Hey, you got here's my soul. You my this number. Yeah, honey, whatever you need, and they can buy as much as they want. All right, thank you. Boom. Do we call that? Do we call the next parent up? Same thing. But then I reflect back because I personally purchased my mom's life insurance, and she was elated. Cool, right? Thank you. I'm glad. I want to see you get something. Now, I don't want to burden her with a payment or, what I'm saying? She's, older. So then I'll turn around. I reach out to my brother and I said, well, because I don't want my brother feeling like, okay, well, life insurance, I should get. That was my mother too. How much life insurance I get? So I was like, look, man, I'm buying some life insurance on mom. I think it's a good idea that you buy some on her as well, but it's up to you. You buy as much or as little as you want to. That's your business. You know what I'm saying? But she's giving us the opportunity. She says, yeah, you can. So he bought some on her too, right? But what that does when it's done in that fashion is it keeps it fair for like all the siblings, because everybody think life insurance is like free money and just what you
Right.
how much you get, how families fall out, all this, that, the third, right?
Yeah.
And so it's like, hey, look, everybody buy. So, and I've schooled my older clients who are on fixed incomes, who do have 6, 7, 8 kids. Say, look, okay, have a family meeting. Hey, daddy's getting older. Look, I got a really good insurance agent. Here's how much life insurance costs. Whichever one of y'all want to buy some life insurance on me, have at it. You have my permission. I'll give them all the information that they need. So one kid buys 20,000, another kid buys 5,000, the other kid don't buy nothing. Well, guess what? So when the day come, you know what I'm saying? Don't be looking at me, right? You got $20,000. You at least give me, like, bro. You had, you know what I'm saying? It's all fair, right? But no, we gotta, these are guarantees. We're all gonna transition one day. That's guaranteed.
Death and taxes are guaranteed in life.
Death and taxes. Guaranteed. You know what I mean? So what are we putting in place, right? You know what I'm saying? And then on the flip side of it, they're still working with clients when their parents do pass and when they get this big check, right? And so now it's like, hey, slow down now, right? And that's not just a check from life insurance, but a big check on anything, because just I've in my 11 years, I've seen some folks blow through some money, right? And it's just human nature, right? So anyway, I work on that side of it as well, so that way what this new accumulation doesn't get squandered, So I do it, I work on two fronts.
Yeah, sounds good. Well, I don't want us to end our conversation talking about mortality, but I mean, I was just gonna say, like, another thing you can use life insurance for is to begin to build wealth. So, do you want to speak on that aspect a little bit? You're talking about like whole life insurance products and building wealth versus using it for better expenses.
Well, yeah, I mean, so you got products that can do it, and I don't think I necessarily, I would just say we got to start somewhere. I think the best place to start, let's make sure you have life insurance that you own, so it's not necessarily life insurance through your employer.
Right.
It's a great place to start, but I think it's really catered to wherever you're at in life. I'm starting to realize that, really, here's just a way of looking at it. At what point are you wealthy? Are you, I think you're wealthy when you decide to start living a certain way, and you start to do certain things and have certain habits. So it's almost like it's not the finish line. It's really all the things that you've done before you got to that finish line. And so I think if we can forget about that destination of just this wealthy, lofty place, just start working on the things that can be done now. And this depends on where most folks are at. But you got to start with, I think the starting place is just, budgeting, living within a particular budget. And that's a time budget, that's a money budget, and that's applying your energy in the right places. And so, but I think that, once you actually, you kind of got to look at it not because your life, believe me, what doesn't dramatically change when you get there. Your life is kind of the same, really. It really is. Like the temperance that you're going to develop that along the way. The levels of, I'll say, a frugality, because that has to set into it. So are you wealthy once you achieve it, once you accumulate it? Or were you wealthy when you start walking down that path? At what point did you become wealthy? I'd say once you actually start living that way, because that's what actually got you to where you're at, right?
Right.
Not necessarily just once you decide it and once you start living a certain way, and you start, putting your energy in different places that got you to that point. That's when you really became wealthy, in my opinion.
Okay, very good advice. Well, thank you so much, Ray, for being our guest this evening. Thank you for being a treasurer for DBHG and being one of our charter members, and for continuing to support the organization. Even though you aren't going to be able to attend the April event, we look forward to seeing you to our fall and winter events. Anything else that you want to leave for your audience?
Gosh, I had a great time. It was a very fun discussion. Thank you, Nancy, for all that you do to host this thing and to keep the Business Hub group going. I think it's a necessary organization, and you're always innovating, even with this platform.
Well, how can people reach you if they're interested in doing business with you?
So 248-833-0070 is my office number, or just Google Greg Blackwell. I'll pop right up, Greg Blackwell. If you go Greg Blackwell and Farmers Insurance, I'll definitely pop right up. But just go Greg Blackwell and the word insurance, and you're sure to find me. And so, just remember the name, Greg Blackwell, Southfield, Michigan, is where my office is located.
Okay, thanks so much, Greg. Thanks for joining us tonight, and congrats on all of your successes with insurance. Continued success to you, and we will see you on the show on Thursday. Thanks so much, guys.